Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, we've got a daily chart of the ES, and what this shows is you had the big down day on Thursday. You had the move in the very early Globex session, which actually was Thursday night, headed into Friday morning, that tested and bounced off of the lower band. The bears, in bear fashion, got squeezed, completely blew it all day long on Friday, and gave back the critical ground that is the 20-day simple moving average or the middle Bollinger Band. Yesterday, there was no real push. We pushed down to 59, made another morning dip, about 11 o'clock, which the dip buyers came in and bought and ground the market higher all day long. My message today is twofold. Number one, don't complicate things. Don't complicate the market. Yesterday was a very easy day. We traded down to 59. We ended up. I got out of my longs from back in from later on Thursday night yesterday, and I ended up getting back in on this morning dip. I got in at 60.5, and we rode that out all day. I exited it before the close, but I could have just as easily kept it on. But my feeling right now is with what's going on in the Ukraine and what's going on in Gaza, I'm going to really try to limit what I'm carrying overnight, long and short. So what am I going to be looking for today? Well, I hope I get a dip to get back in and get long. I'm hoping. That's all I can do right now is hope. Because what Globex has demonstrated is that the test yesterday and rejection of the middle Bollinger Band as resistance is now turned it into support. We're now 7 handles over the weekly pivot. We are just about 10 handles over the middle Bollinger Band, and the bulls they're marching to the upper band. That's the next stop, 1983 to 1986. At this point, 78 quarter doesn't really have a chance. It looks a lot like this one back here, which was 1954.75. And then you had the 1960, the 1960 high that didn't really have a chance either at the time. It's setting up the same way. The Bollinger Bandwidth is incredibly tight. It is under 2. It is at 1.85. These are not bands. I got the question in the room yesterday. Should we short the upper band when it touches the upper band? No, you shouldn't. It looks a lot like over here where I have the oval, where you had the Bollinger Bandwidth here was very tight. This is even tighter now. You're at that 2 to sub 2 stage. We touched it on May the 23rd. Right around 1897 was the first touch, and all we did after that was go on a band ride. It was 5 days worth. 3-day break wasn't really a break because it was just a bunch of rejected lows. Then we went on another 3-day band ride. So what am I expecting here? I'm expecting a touch of the upper band and then a band ride. The bears have to reverse this. The only way they can reverse this at this point is to do over 30 handles in the other direction. They have to break this low, the 42.5, the Friday low of 42.5. They have to break that and then convert that 42.5 into resistance. That would open up the Bollinger Bands, and we would go on a lower band ride. But that, folks, is a very low probability outcome. And you have to expect what's exactly been happening during the course of this uptrend, which is that we're going to march to the upper band, we're going to test the upper band, and then we're likely going to go on an upper band ride, likely to last 2 to 3 sessions. Okay, so what am I looking for today? I'm hoping to get a dip to get back in. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Come check out the chat room. We're buying these dips. We're riding the trend. We've done a lot of good stuff short too, so we're trading both sides of it, and I think you'll find a lot of valuable information there. I hope to meet you. I will be back tomorrow morning with another webcast. Trading well, everybody.